And in the U.S., the stock index futures pointed to a lackluster open today after a strong performance on Wall Street during the previous session. On Wednesday, U.S. markets bounced back following a sharp reversal on Tuesday. With details is Jill Maladrino, global markets reporter at NASDAQ.
Wednesday, we opened up higher, getting all of those gains back following reports out of Goldman Sachs and Bank of America. But the big equity story this morning in the U.S. is GE. Sources, according to CNBC, are saying the company is looking to break up. In fact, a few sell-side analysts have some breakup values assigned to the stock. So that's really going to be the story in the Dow going forward. Now, another big story that we're looking at globally is Bitcoin. That sank as much as 20% on Tuesday, and it's even lower a little bit on Wednesday, below that $10,000 level. And that's because investors are speculating about the prospect of regulatory crackdowns. The weakness in the space, it's weighed heavily on Bitcoin-related stocks, blockchain names, and so forth. But let's focus on earnings. About 5% of S&P 500 profits from 27 S&P 500 companies will be reporting this week. The focus for investors will be on company guidance regarding the impact of the new tax law. Consensus estimates are currently calling for a 12% year-over-year increase in S&P 500 earnings for the quarter. Now, this growth is expected to be mostly driven by a solid rebound in energy sector profits, as well as the potential for double-digit gains in the technology and financial sectors. Pre-announcement trends and recent earnings revisions, positive global economic surprises, the new tax law, U.S. dollar weakness, and higher oil prices all bode well for earnings results. From the NASDAQ Market Site, I'm Jill Malandrino, Global Markets Reporter at NASDAQ.
In Asia, the Nikkei 225 gave up early gains after touching a 26-year high earlier in the session. Investors also digested a raft of China data released as mainland markets closed. The Nikkei index declined 0.44% to close at 23,763 points. In Seoul, the Kospi tacked on 0.02%. The Bank of Korea held interest rates steady at 1.5%, as was mostly expected. The central bank was seen as likely to stand on the sidelines due to tighter monetary conditions driven by strength in the Korean won. Over in Sydney, the S&P ASX 200 finished lower by 0.02%. Gains in the heavily weighted financial sector were offset by losses in energy-linked stocks and gold producers. Hong Kong's Hang Seng Index rose 0.47% after recording its second straight record close in the last session. And mainland stocks closed at their highest levels in 2 years, as the Shanghai Composite advanced 0.91% to close at 3,475, and the Shenzhen Composite added 0.13%. And back here, Angola plans to issue a Eurobond and renegotiate bilateral debt in 2018 as part of a series of measures aimed at restructuring the economy and controlling mounting debt payments. President João Lourenço took power in September and is seeking to win credibility with international investors and shared Angola's image as an opaque oil economy with rampant corruption. The government earlier put the Eurobond size at $2 billion. And Zimbabwe will not stop using bond notes, a domestic quasi-currency, until the economy fully recovers. And that's according to its finance minister, Patrick Chinamasa. The Southern African nation in November 2016 started using bond notes in a bid to ease shortages of US dollars, the country's official currency since 2009. Since Emmerson Mnangagwa became president last November in the wake of a de facto military coup that removed 93-year-old Robert Mugabe, there has been speculation that bond notes will be scrapped.